This is the briefing for Thursday, July 27th. I've been doing these briefings for several years, and long-term subscribers will know that each time we come up to a Fed meeting, typically my position for my own trading strategy is to stand aside because it's really unknown, and not really what the Fed decision will be, but it's unknown as to what the market's reaction is going to be to the announcement by the Fed, and then of course the news conference afterwards with the chairman. Yesterday at the Fed announcement, I stood aside, and then in the analysis yesterday, I talked about a potential short-term strategy for today's trading. And I always felt, and I've said before previously, that it's the day after the Fed announcement that is most important, because typically you get just a lot of back and forth movement after the announcement, but then it's that night there, after the market closes, that traders really sit down and try to determine whether value is going to be higher or whether value is going to be lower based on what the Fed said. Now, these are 15-minute charts of the spiders and the Qs. And typically I use a 15-minute chart mainly because it doesn't give me a lot of the volatility that a 5-minute chart will. And then I use longer term charts also, but I use 15 minutes for basically for trading. Now, yesterday I talked about, first of all, being very cautious in the first hour of trading. And I related this in regards to if the market gaps up or if the market gaps down, that the first hour of trading is very important. The second thing that I cautioned on was to watch for follow through. Whatever you're using, whatever time frame you're using, you want to make sure that at the open, if there's a gap, that you want to see follow through. You want to see buyers, in this case for today's open, it gapped up. You want to see buyers coming in and continuing to drive price. And what happens here, as you can see, basically on this open, was that buyers came in all at the open, but then there was no more buyers that came in. I won't say there were no more, but there were fewer buyers that came in, unable to drive price higher. So there was no follow through in the spiders, and you can see what happened. Now, this 15-minute chart, so here's the first hour of trading right down to here. That was a pretty clear indication that there was not enough buying strength for the market to continue higher. The third thing that I talked about yesterday was to watch for a divergence in market breadth on any gap to the open. And you can see this is the first 15 minutes of trading, and this is where breadth was in terms of that first 15 minutes. Now, you can see that if we go back to this previous high, you can see that high there, and this high here was only 775 shares positive. So that was another indication, the possibility that this gap open was going to get closed. And you can see then it traded down right to 457, which was support, bounced off of it, and then of course came back down and then traded straight through it, then trading down also through 453, which was the next level of support. And you can see the pause that occurred here, and then of course we moved even lower, trading down to 452 before we close. Now the Qs were a little bit different. Now this is a 15-minute chart, and I'm going to show you something different in an hourly chart. This was the first candle open in the first 15 minutes. And you can see that there was a divergence in breadth here also. Not a great divergence, but there was a divergence between that high and this high here. But you can see there was a little bit of follow through here, just a little bit as it tried to move higher. Sellers came in, or buyers simply were not strong enough to drive it any higher. And so we've got this move back to the downside. And then of course this move down, a rotation back up, and then move down, pause right at this 380 area as traders tried to decide whether value was going to be higher or lower. They decided lower, and then of course we got this move down through 378, and now testing the 375 area, which is the next intermediate term level of support in the Qs. Now you can see also that volume increased pretty dramatically as the day moved on. We have a little bit of potential exhaustion here going into the close. You can see that this buying candle came in. So we may have a little bit of exhaustion. It may signal some type of pause in tomorrow's trading, but that's yet to be seen. I think there was a lot of damage that was done in today's trading by trading through all of these levels. Now, the important part for tomorrow is to keep in mind what was support today is resistance tomorrow. So resistance on the spiders, short-term resistance, I should say, is going to be 453.50 up to about 454, the upper extreme of this pause. And in the Qs, resistance is going to be 378, then of course going up to the 380 area, and then of course 457 in the spiders. Now I want to move to a little bit longer term chart, and this is an hourly chart, and this is one of the reasons why I said that the first hour is important. Now if you looked at the first hour, this is the first opening candle on the gap up on the spiders. This is the divergence in breadth that I talked about, and you can see there was absolutely no follow-through in that first hour of trading. This is the first hour of trading in the Qs. Now, I think you can see this wick, this selling tail that came in right through here. So this first candle was not taken out. There was no follow-through. And then, of course, you can see where breadth was. It was diverging pretty dramatically, on a hourly chart. And then the same thing occurred in the Russell. That's the first hour of trading, and that's of course where breadth was going into or at the open in today's trading. Volume increasing on all of the indices. Now let's go a little bit longer term and see where we are in terms of the daily chart. So you can see here that we had this pause right through here, breakout, another pause. And now we're testing this lower extreme right at the 450 level, which corresponds with the shorter term charts I showed. So the next level of support, if we see lower prices tomorrow, next level of support is going to be 445 from a longer term perspective. And if that's broken, that would be significant because that's going to open up a potential rotation back down to the 430 area. In the NASDAQ, you can see we had this area of rotation here, broke out higher, tested that breakout point, came back up, and now we're retesting that point at 374, 375 area. Breaking that's going to open up the potential to trade down to the next level of support, which is going to be the 356 area. And in the Russell, you can see that basically the same thing. Rotation, breakout, rotation, came down. We're testing that lower extreme of this area and the upper extreme of this area. Trading through today's low in the Russell is going to open up a potential test of 190, and trading through that is going to open up a possibility of trading down to the 180 area. So basically, as we can see, and as we go back into these daily charts, you can see that we had a pretty good decline in terms of the of breadth, market breadth. Same thing in the NASDAQ and the same thing in the Russell. So basically this move today, this decline was basically supported at least by the internals. Now, once again, and I've said this previously before, in any move like this or any reversal, we don't want to see the internals. We don't want to see volume come in all at one time. We don't want to see breadth absolutely collapse. If this is the beginning of a new trend to the downside, then we want it to build on itself and not see everything just come in at one time. Typically, that's the sign of an exhaustion move. Now, yesterday we were at a point of being neutral in terms of overbought and oversold indicator, and I suggested that potentially because there was a tightening here and a tightening in the NASDAQ, that potentially that's going to open up a move, a pretty good move in one direction or the other. Because it was neutral, the indicator doesn't give us an indication as to whether that's going to be up or down, but it certainly played true when we got this convergence here, that there was a larger move in degree of time and price that potentially was developing. We didn't know whether it was to the upside or the downside, but by looking at the three things that I talked about in yesterday's briefing, watching that first hour of trading, watching to see if there's follow through, and then watching to see if there's a divergence in breadth certainly gave us a pretty good indication that there was going to be a possible reversal in today's trading. So we're approaching oversold tomorrow. We're pretty close to being oversold. That does not preclude us from going lower into tomorrow's open. So the thing to watch for tomorrow is going to be what happens in terms of market breadth on any lower low. So going back to the hourly charts, if we trade below today's low in any of these indices and there's stronger breadth than there was at the close today, then that's going to suggest that this move is potentially over, at least for now, and there's a potential pause that may be developing to work off some of the potentially oversold condition, and then we'll have to determine how that pause develops. That will give us an indication as to whether we are going back up again or whether we've got more downside work to do. Now, the other thing that's important here is this is total volume on the S&Ps, and you can see that we had a pretty nice increase in volume. These two lines here are basically, I wanted to see for myself what the average volume looks like so I can see whether there's an extreme move in one direction or another. Same thing with the NASDAQ, and you can see total NASDAQ volume increased as well. So this move today was supported by volume, it was supported by breadth and the internals. So it's going to be very interesting tomorrow to see what develops. Now, certainly looking at these short-term resistance areas, 450, 350, and 378, those will be important to see what happens, especially as we approach them. And then, of course, if we do get lower prices, it's going to be interesting to watch what happens with market breadth, if there's a divergence, and on any pause, if there's lower volume than we saw in today's trading. And if we don't just start immediately up as in tomorrow's trading, then that's going to suggest that potentially it is a pause, and another move to the downside is certainly a possibility. But we'll have to analyze this after tomorrow's close. Just be aware of the important resistance points now, and of course watch that first hour of trading and watch what happens with market breadth on any lower low. Have a great night, and certainly it'll be an interesting briefing for tomorrow.